Welcome back to Market Call tonight. We are going back to the phone lines. We are going to Point Pelee, Ontario, where John is standing by. John, I just learned a fun fact. You're on the same latitude as Northern California. Congratulations for that.
Yes, thank you very much, Jameson. You're doing a great job.
Thank you, Connor.
I'd like to ask my favorite stock doctor, Mr. Burrows, his current outlook on the North American rails, and especially Hunter Harrison. Thanks,
Sure.
gents.
So, John, look, let's start with the sector. The transports were the first group to roll over in 2015 in the spring, and they were the first group, one of the first groups to turn up in February of last year as the market started to repair itself. And they've gotten a little sloppy recently. So within that group, of course, you got the airlines, and some of the airlines in the U.S. have become a little sloppy. There's a couple of the rails that have become more sloppy. And so I think you have to take some note of that. Now, could be they're just consolidating. When I look at the group, CN probably is the most attractive. I think that it looks very, very good. Very solid technically, great numbers. I think CSX, when we talk about Hunter Harrison,
I was going to say,
right, has been the leader in the rally. And it maybe in the very short run was a little bit of buy the rumor, sell the news.
Right.
So stocks sort of had a great lift as that was all announced. Now it's pulling back a bit. I think it wouldn't be impossible to see the stock pull back to $38 or $39.
was a lot of it to do with the fact that Hunter Harrison wanted to do that tie-up?
All kinds of speculation around that coming in.
Right, but there's a huge
you're paying
regulatory
a lot.
hurdle.
You're paying a lot, right?
Yeah.
So I think the way I look at things is, because the group is a little bit sloppy, I don't think you have to race out and buy them. I think that when a stock gaps from 38 to 43, it's almost always going to come back and fill that gap at some point before it continues on. So it's very possible you'll get an opportunity to buy this at $39, $40 kind of thing.
So simple yes or no, you think Hunter Harrison can pull it off? It's kind of the impossible. We haven't seen a big merger in the Class 1 railway space in like 20 years.
Yeah, I've never been one to bet against Hunter Harrison, but
everyone who has in the last couple decades.
I wouldn't make a decision based specifically on that, right? You need the backdrop of the group. You need a strengthening economy, which we're getting, right? The housing market in the U.S., that's the group that I could talk about all day long today, is coming out of a big base, and it looks like there's some real room to run for the housing stocks. It's important for the rails, right? They ship a lot of construction gear. So.
It's pretty solid, sober second thought. I might start calling you Senator David Burrows for that process. But in the meantime, we are going to go just north of where we are now, outside Barrie, Ontario, to Aurelia, where Dave is standing by. Dave, do you have a question for David Burrows?
Thanks for taking my call. I have a question, David, on Whitecap Resources. I was holding it earlier when the prices was up about $11, and I kind of sold with the crude falling. I'm debating to get back in, but I see the API at 430 was a 4.5 million build, and now I'm hesitating at getting back into the oil market and maybe even just looking at adding to something like a utility or an Algonquin Power instead to be safe.
Yeah.
I'll hang up and listen to your answer.
So, look, the overwhelming sentiment when a sector gets crushed is to go back and look for the money that you feel it owes you, right? And so a lot of people jumped right back into the energy stocks in January, February, as we did. But I do know that the history is, unless you get significant restructuring, it's likely that there's going to be some indigestion after 12 or 14 months. And that looks like what we're getting. So I don't know how long that goes on for. I don't know how high the inventories can go. It's like, how low can a stock go? I don't want to try and pick a low in a stock price.
Catching a falling knife.
Stock's kind of broken technically. The sector's under pressure. I just think that there's maybe better places. It's not to say they can't get swung around. Maybe they're a little sold out. But I'd want to make a bet on that when there's other sectors that are doing well. So I like the Algonquin Power. I think that's a great position. It's acting really well. It's in a pretty defensive group. And I would be inclined more to go in that direction.
And we're going to fire up the Twitter machine now, where viewer Mr_Airwolf2, undoubtedly the name that his mother gave him, is asking, what is your analysis of AAPL Apple for those of us who don't speak stock market?
Yeah, it's been in the middle of a great run. The stock's run from 90 to 140. The tendency is for Apple to run up into a large product cycle, which we have coming. The new iPhone is coming. They had some product announcements today. in the very short run, is probably a little overbought. We own some stock in our portfolios. We really like the tech space as a whole, and Apple continues to dominate with its products. So I like the company certainly as a hold. I would continue to buy it. I'd prefer to see it pull back to the moving average at like $132 or $135 a share, which is not a long way from here, a few dollars. But if you own it, I definitely would be a holder. And I think it's likely to have a pretty good year.
But I mean, how much further if you want to take a longer timeline on something like Apple, right? I mean, unless we're all going to start driving Apple cars to our Apple houses, watching our Apple TVs, and then sending Apple messages on Apple Twitter about all this stuff. I mean, this was a company that everybody said was going to be the first $1 trillion company. Do you buy into that? Do you think we're really going to see Apple just continue to blow the doors off, create new product categories, all this stuff? They haven't done in about a decade.
Would you rather buy a company that continues to execute consistently, right, or buy a company that maybe hasn't been hoping that it might, right? So this is a company, I mean, you could have said this at any point over the last 10 years.
And have.
And people have, right? So I had a discussion with somebody recently who said at 16 or 17 times earnings, the market's expensive relative to the long-term average. I said, well, that's great, except if you sold all your stocks in 1994, at 16, 17 times earnings, it was a long 6 years to sit out while the market went higher. So long as they continue to execute and hit their numbers, so long as they continue to bring good new products, as long as the market cares, and as long as the sector's in favor, I don't think you want to fight this one.
Oh, right. More sober second thought from Senator Burrows that I will absolutely not argue with. I won't argue with you folks either. If you want to ask us more questions, remember, you do have to pick up the phone and dial. We have David Burrows here. You don't get to ask questions of the President and Chief Investment Strategist of Barometer Capital Management every day, but today could be your day if you pick up the phone and dial 1-855-326-6266. You might just get lucky, folks.